Morning, everybody. If y'all could let me know if you hear me, that'd be much appreciated. Yo, what's up, Nico? Can you hear me, brother? Had to make some changes to my sound with the headphone configuration. Yeah, just let me know if you can hear me. Okay. Okay. How about now? Is that better? How about now, brother? Alright, how about now? Is that better? Yeah, okay, cool. It says it's kind of peaking, but I don't know. I hope it stays better. But yeah, so let's start diving into things right now. So sorry, let me get some water real quick. So yeah, we look at the weekly chart right here. First off, there's no news today. Okay, so the fact that there's no news, the main protocol, at least for how we do things over here, we wait for the actual New York Open to start considering any type of trades because we need that volatility. The 530 Open, which is what we just pressed into right now, that is the open of the bond market. So that's the first time, or that's basically the time that you want to at least be on the chart, able to look at things. And then from here on forward, right, the first macro in price delivery, based on what we've learned, is the last 10 minutes of this hour and then the first 10 minutes of the next hour. All right, so that's the very first macro. And then all the way up until lunchtime, we have multiple macros given that same criteria, right? That's generally where we live on this channel. I don't really trade the PM session. But nonetheless, there's macros for that session as well. All right, so we've been calling for price to go higher in my private community. I haven't been on live for 2 weeks. Just been really busy, focused on my private community. But we're back, right? And we've been basically calling for price to go higher, given the bond and yield relationship and just the overall weakness in the DXY, right? We called for the weekly fair value gap here, way up here, right? When price was retracing into this daily fair value gap, we were already ahead of that, talking about that, claiming the price was going to go lower. And then you come to find out, when ICT goes live, everything has been completely in sync with, ICT himself, right? So that's always a good thing, right? ICT said in his mentorship that when you're able to predict what he's going to say before he says it, without having to pay attention to what he's saying, right? Once you chime in and check in on his stuff after you did your own analysis, that's graduation. If you could be in line with what he says before he says it. So keep that in mind when you are progressing, because that will be a very telling sign that you are moving absolutely in the right direction. But then again, you also want to keep track of your independent thinking, right? You don't want to be solely dependent, right? But it's always good to have some people, or a person or two that you feel you can trust that has proven themselves. So then you can just kind of, confirm or be able to identify things that you missed, right? If you were having some hard times getting in line with the overall narrative, right? So yeah, we've been calling for also higher currencies since last week, right? Or when we were down here, we were already assuming the price was going to turn based on what the bonds and yields were showing us, right? So the bonds here seem like they want to go higher. We have pushed into this large higher time frame wick on the weekly time frame, but since we're kind of showing interest to get above that and close above that, we may continue to see price march higher and possibly look to take out this buy side one more time. Obviously, we're going to have to see if that continues to be the case. Now, if price turns away from this wick here, the midpoint of this wick, that's going to be indicative of weakness, right? We do have the equal highs up here, right? We've also pointed that out well ahead of time and have been continuing to trust the overall bullish sentiment after price did that huge drop, sweeping out liquidity just to rebound off the heels of many negative news headlines, basically enticing people to try to sell as if the world's going to end, right? That's just not the case, right? So price ended up turning around in line with the bonds and yields. DXY ended up falling in line again with the bonds and yields, seeking the weekly fair value gap. We'll discuss in a little while. Okay, so yeah, what we're looking for here is we want to see how this is going to respect or not respect that wick. If we go to the 2-day chart, we can see that there's an order block here. All right, so that's something to place in your chart. All right. So, and then if price wants to break through this low, if it wants to show no respect to the midpoint of this wick, ideally we'd like to see ourselves continue to push higher from this order block level, along with not attempting to get back down to the midpoint of this wick. That is all signature showcasing the fact that price is bullish delivery for this market, and discount arrays will stay intact. All right. So again, if that is the case, then we'll continue to see price push higher. That in turn would then continue to promote the overall bullish narrative for the indices. And then if we can see the yields continue to fall lower as well, I pointed the weekly low out and the weekly high as our current extremes in terms of liquidity to keep focused on. So if we're bearish, right, we have also previous day's lows from the previous day's candles, right? And then we also have this one as well, right? So if price is going to want to head down in that direction, it's going to have to break through those levels, right? In order to get down to here, it has to break these levels first, because that's just the way it is, right? It's just common sense. We also have an order block here, a bearish order block. Notice how we went to the, excuse me, notice how we went to this market and seen that there's a bullish order block. Well, on the flip side, with this market that is reverse correlated to the bonds, these are the bond yields, with the reverse correlation effect, this is going to likely favor sell side if the bonds are going to favor buy side. If this order block is going to hold for bullishness, then we should ideally see this order block hold for bearishness. And again, the bonds push the indices around and the currencies that are opposed to DXY, and the bond yields go with the DXY. They're heavily influencing those markets, right? So interest rate markets are very important. I've made many comments about them over the last couple months and then the last couple years in my private community, and you'd be very amazed to see how many people get this logic, which has already been taught, obviously, but most people don't pay attention to it in ICT's lectures because they think it's quote-unquote too complicated, when in reality, you don't have to even know what the hell a bond yield or a bond is. Like, what is the purpose of it? You don't even have to worry about it. You just have to understand what the relationship is if you want to keep things simple and able to, just be used as a tool, So clarity comes from, obviously, layering confluences, and these interest rate markets act as leading indicators, essentially, right? Versus other so-called indicators that are laggy and based on things that have nothing to do with anything. This pair of markets or group of markets, 3 each, they actually heavily influence and will dictate where things will likely head to. And a lot of times it helps you build clarity around the overall narrative and sentiment in the marketplace, right? So yeah, hope that made sense. So yeah, like I said, if we see the bonds go higher and respect this order block here and respect this wick, the midpoint, if we can stay above that, that's showing me that we're still strong. And if this can remain below the midpoint of this order block, right, it already looks like we've had a daily bearish power 3. You see that the upper portion of the range has already been set for this current candle. It's pushed away from this order block. So now what could be in our crosshairs? Well, this previous day's low here could be in our crosshairs. Okay, so, and again, if it's going to try to reach down below this low, right, it's going to have to continue to press through previous day's lows, which you can visually see fairly simply here. This is a previous day's low. This is a previous day's low. This is a bearish order block. This is a inversion fair value gap potentially if we can get down below that. So if all those things stay intact, obviously you have a lot of confluences to trust that this market will go lower. And then, like I said, the relationship that this has to the other assets, like the currencies, GBP USD, Euro USD, as well as the indices, that relationship helps move you forward into clarity and trust, because these are not just some willy-nilly random markets. These dictate sentiment. At least, they push price around, right? If you want to keep it simple as possible. And certain assets will be influenced by these, right? Which I've already mentioned, right? So that's my assumption for this market. And then the other market, the bonds. The bonds I feel should go higher potentially, and then these should continue to respect premium arrays, which we just mentioned, and then potentially try to attack previous day's low here, and then eventually maybe get into this wick, maybe get into the low of this daily candle. That's a previous day's low. This is a previous week's low from 2 weeks ago, and then we have the previous week's high up here. So only way I would believe that this is going to go higher, and that would then obviously make some changes in the other assets that are influenced by this. The only way I would reasonably anticipate that this is going to stop going lower is if we start seeing the midpoint of this disrespected, continuously see us get above previous day's highs, above this new week opening gap, and then obviously disrespecting this wick here, right? No issue. Violating the midpoint of this and then violating this high. That would be 3 PD arrays in our view that are now getting totally violated. So we have no logical reason to continue to try to force sell side delivery. Okay. I just saw that the stream kind of did like a weird pause, so I hope it's still working. If you guys could leave in the chat if it's still working, that'd be great. But I'm going to continue, right? So with that being said, when we take that information, we now have a good backdrop. We have our news, situated. Okay, we have no news. Okay, so that means we're going to wait for the actual open price on the day, just so we can get a volatility injection that we can anticipate. Okay, so we have that. Then we went to the bonds and yields, determined what our sentiment is for that, which in this case would be possibly seeing bullish bonds, bearish bond yields. That should lead us to, without even looking at the other charts, that should lead us to GBP USD, Euro USD rallying, and then the DXY falling, and then the indices also rallying as well as a result of bullish bonds and bearish bond yields, right? So I hope that makes sense, because mind you, this is a repetitive process. Like, this is a very grounded, technical, logical, effective process for you to gain clarity and trust when you're trying to identify what draw and liquidity should be favored over another when you're, in this case, trading the indices. All of the markets coupled together that I've just mentioned, from the bond yields and bonds, the currencies, DXY, and then the relationship between the three indices, all those things coupled together give you a feel for risk on, risk off principles. And I can make a video about that. I'm not going to get too deep into that right now. But if you guys want me to make a risk on, risk off video, we can certainly do that. Because all the markets are connected. And the more that you can get familiar with this process and what markets influence others, the easier it'll be for you to trust or start marching towards your ability to trust a particular directional bias and higher time frame narrative. And then it'll also help you decipher when things will change, right? If something changes in the relationships, and then you see like a break in market structure of some kind in the asset you're trading, then that could, start pushing you towards being flexible and being able to trust when you should be flexible. And then it also influences high probability versus low probability directional moves when you're able to either identify a crack in that correlation or relationship between all the assets, or a confirmation between those assets relationships. All right, so I hope that makes sense. A lot of people think this topic is boring, but then that's why most people fail. Okay, it's not just about GBP USD. It's not just about the indice of your choice. It's about how everything works together so you can build clarity. Because remember, like I say on every live stream and every video, the whole goal and point of you guys being here and me having this channel is to get you guys to see what will get you to clarity. And then once you have clarity and organized repetitive processes in place, you're able to then march on your own and then trust yourself and your opinions logically, right, with real leading indications versus lagging guesswork that people get absolutely obliterated using. All right, so I hope all that made sense. So now we're going to move on to the currencies now. Obviously, based on what I just mentioned, you can see how that's fully intact, pressing the currencies higher. And it's just a beautiful visual representation, right? You could just visually see how everything we just discussed is in fact in the markets, even at this very moment. Not that there's something to trade right now, that could be, who knows, but we need to situate our opinion first and build a backlog of information and confluences, so then we can again develop trust when we try to make a financial decision. Forgot to do something real fast. So yeah, it's based on obviously the laws and rules. I have to show y'all this. Right? Trading involves risk, obviously, and I'm not a financial advisor. So yeah, with that being said, the currencies are rallying, right? Who knows if it's going to want to reject from this area. We're going to have to just wait and see, obviously. Otherwise, this thing is going to just continue to smash higher, reaching for this 2-day 50% of the order block, right? That is up here. Okay, so we have this large order block, and then we have this buy side liquidity as well. So I'll put that on the chart. as a potential draw. Looks like we're going to blow it out, but we'll see going into the open how it's going to choose to do that. Are we going to retrace first to get down below the daily open price at midnight Eastern, or are we just going to drop maybe below the New York open to then present power 3 using that, right? Generally, when we're really far away from the daily open, going into the New York open, like we are here, we're very far away from it. Generally, when the open price on New York comes, it'll potentially use that instead to then give us a power 3 dynamic. So that's the way that you can use both of the power 3 references effectively. That's the difference, and that's, if you can get below both of them, the New York open price as well as the daily open price for power 3, that is even more effective, as long as it makes sense still in the chart and intermarket relationships agree and everything we've already discussed is in alignment. If all that makes sense and we get down below both of those open prices, you are in a very, very good position if you are correct on the overall narrative, right? So, with that being said, we can kind of see, let's observe SMT characteristics. We do have SMT at these lows, so that's just further giving me interest that we're going to continue to go higher, along with all the other things we've already talked about. So that's what I want to see. And again, when the open price comes, I want to see some type of jolt lower of some kind. I like to see price drop lower to go higher, because smart money does the same thing. They look for liquidity pools that can be targeted reasonably, and then they position and engineer losers by attacking those levels and then turning price on a dime while they triggered in those engineered losses, right? They got to have a winner and a loser. So in order for them to pair up their orders, they got to be in a position where, for one, it's a decent near-term discount, and then obviously, two, there has to be some logical liquidity there, whether that's an equal high or low, or in this case, if it's bullish, a relative equal low, or some type of discount array, preferably below one of the open prices, depending on the context, right? But yeah, so we're just raging higher. Everything we've discussed for the bonds and yields, again, is showing beautiful evidence here. And just the fact that we've talked about this and now you're seeing it at play, it's already building trust. This is why I love starting at this point. Because when you can start to do this process and then you go in without even taking a trade, and you can see visually that it's all related and how it all impacts one another, the asset you choose to trade you start building a lot more trust when you get comfortable with applying the process, and it becomes easier over time, obviously, right? If you're brand new, it's going to take time for you to get used to it. But at the same time, even if you're just observing the process, you can still make massive leaps in your understanding and in your journey to building trust, because trust is important when it comes to clarity, right? If you don't have trust, how are you going to be clear and have clarity, right? So all the things we talk about in every single live call is giving you elements to trust and build clarity with, from start to finish type of drills, right? So I hope you guys get value. And if you guys do get value from the channel and you guys do regularly hop on, I'd appreciate if you like, comment, and subscribe. Like, leave some of your thoughts. You don't have to comment, obviously, unless you have something you want to point out. But yeah, if you could subscribe to the channel, if you could share these live streams with your friends if they enjoy this type of thing as well, or if you feel it'll impact them in some type of positive way, I'd appreciate that. And I hope you guys get value every time you spend time with me, because I'm not just here just because, right? I want to see y'all win, so but yeah, so we could see how everything is perfectly moving together. Take one more glance at the DXY. Okay, we got the weekly fair value gap down here. It's still marching on towards that, and then obviously we're potentially going to look for this low to get violated. That is far away. I don't believe that it's going to do much to get down there for this week. We have a news event later in the week that could potentially cause some issues. We have the Fed's speech, and then we also have this news event that's pretty hectic. I mean, even setting that aside, Fed chair speaking is one of the restricted news events, especially for new traders. And then obviously, if you're a veteran and you understand what you're doing and you trust yourself and you have clarity and organized processes and manage risk properly, you can go in there and do whatever the hell you want, right? But if you're new, just trying to get your footing, it's best to put these guidelines in place and just kind of observe, right? Stay away from high volatility like segments of price action until you know what the hell you're doing. You know, you don't just get into a Lamborghini or a race car when you don't even have any experience driving a car yet, right? I mean, you don't do that. So it's best to keep that school of thought in mind when it comes to your reasoning as far as why you don't engage around these news events, right? That's not forever, obviously, but it's a good best practice, okay? So again, we're pushing through this weekly fair value gap. We want to see what occurs here. We want to see how price is going to respond within this weekly fair value gap. Is it going to act as support and push price up to then go lower? Or are we just going to continue to fall off the face of the earth and continue to follow in line with bullish bonds, bearish yields, aiming potentially for this previous day's low, the midpoint of this new week opening gap, and then eventually the quadrants of this large wick here are all also potential targets, right? All off the heels of what we discussed earlier, right? We still have this order block. It's being respected. We've at this point used this fair value gap as an inversion, right? So whether we stay below these levels or not will help us gain clarity as far as where this is going to go. And then that, again, will translate directly to what we see in the currencies, as well as the DXY, as well as the other indices. Okay, so let me pull up all three of the indices. Okay, so looking at all three of the indices, right, you can just see the heavy impact that the bonds and yields have had. The bonds rallying, yields dropping. I mean, you could just beautifully see how impactful that is on these other assets that are obviously heavily influenced in a leading indicator type of fashion by the interest rate markets. Okay, so we have made up for all those losses, or most of them at least, right? Price has came into an order block here. Right, we do have these consecutive down candles to watch and observe the response from. We do have this consecutive group of candles as well that may act as resistance. We have filled in the rest of this fair value gap. We have taken out the previous week's highs here as well. So again, depending on what happens, what continues to happen in the bonds and yields right now, that'll determine whether we're just going to continue to be so aggressive to the upside, continue to possibly seek further buy side, possibly this fair value gap here, in all honesty. Right, that looks like a pretty decent target. We have a new week opening gap here as well. So let me mark that. All right, and then another thing too that a lot of people overlook when they're trying to learn about new week opening gaps and stuff. Based on what ICT has mentioned, another part of gaining clarity in terms of order flow is the relationship and response price has around these new week opening gaps, new day opening gaps, so on and so forth. If it's just ramming through multiple new week opening gaps and new day opening gaps to the buy side, disrespecting all the bearish PD arrays, having the interest rate markets promote this idea, continuing to go higher, all that stuff again brings you clarity. It's bringing you clarity, signatures, and price that allow you to trust the order flow is continuing to be bullish. Also, to add on top of that list of confirmation and confluence to use for verification or invalidation, it's the wicks, right? You look on this daily chart, notice how the midpoint of all these down wicks are being totally respected in one way or another, right? The midpoints are not even getting traded to. That is heavily indicating that we are very, very strong for whatever reason in the indices. And again, you could bring that strength analysis all the way to these two beautiful, impactful leading indicator style markets being the interest rates, right? Those are so impactful, and one of the most incredible clarity building tools and relationships and price action that you'll ever go down the road of studying. Okay, I can't stress that enough, and I mention it every single call. Many people overlook it because again, they think it's overly complicated, and it's just not. It's overly complicated and like miserable to not improve, right? And being able to break yourself out of that comfort zone of I need to focus on one market only, allowing yourself to start at least practicing and understanding these different relationships that the market has on itself and other assets involved. It's just such a powerful lesson and learning tool, and it gets you more familiar with how things operate, right? So, and also having someone around that knows how to do this stuff, doesn't hide it, and continuously applies it in front of you and allows you to see the relationship take place aside from your own studies, I think is just incredible. I know that helped me, from watching some of my charter brothers or just watching ICT himself apply this. It's an incredible learning tool, and again, the whole goal is clarity, and that is one of those things, one of those key elements in price delivery, specifically intermarket relationships and fundamental analysis, that just, I'm telling you, it is amazing. It's truly like a topic that really, really will push you in the right direction. Okay, so just wanted to make sure I heavily indicate that to you guys. Okay, so with all that being said, right, if we continue to see this drop, show no respect, it seems that we are not showing any respect to the midpoint of this weekly fair value gap. With that being the case, then we will potentially continue to see this rage higher as we march through the rest of the session. We have buy side up here. Again, we do have this consecutive string of up candles. We have a new week opening gap, right? So we want to keep those things in mind. If we drop down to the 15-minute chart, it's not illogical for them to want to run down below London's low, which is also below the daily open price, in order for them to scoop up liquidity, like I mentioned, pair their buy orders on the basis of power 3 with sell side liquidity to then march price in the direction of institutional order flow. Again, we've been very aggressive to the upside, so I mean, it doesn't only have to sweep this and go. There's other things it can do too. It can come all the way down to this fair value gap. If we continue to move higher in the structure, right, or time frames, you see this most recent swing low. You can actually measure this out as well to give you a feel for where the larger views premium and discount is at. We have equilibrium down here, right? So if it was to come down to here, that would also not change the overall sentiment because this is just at a discount, right? And this fair value gap being perfectly in conjunction with the discount price level of this current range, I mean, that's, it's a possibility. And you can't overlook that or disregard it. But that's the thing. If you get stuck on the 1 minute time frame and you don't have these perspectives, you may be trying to force buys because you're like the masses who see this just raging higher, trying to just throw buys in with no logic at all. If you're going to be on the 1 minute time frame, you're not going to be able to see or reason with yourself as far as, observing price going lower and still trusting the buys, right? We don't distrust the buys unless there's a real reason to move away from that. Because we have other things that we've mentioned this morning, which I'm telling you, this is like the main process for you to get familiar with where price is going to go, right? There's also a list of liquidity pools that are very common, that are used on a daily basis, that me and my private community continuously dig into and see some dramatic improvements using. But right, like London's high, London's low, previous day's high, previous day's low, previous week's high, previous week's low, those are all part of that list, right? And the new day opening gaps, new week opening gaps, right? All of those things mesh together and give you the ability to have a wonderful chance to have an opportunity almost every single day. You can also find more information on that topic, essentially. It doesn't include all of the specific liquidity pools, but it includes a good chunk of them, and that's ICT's One Setup for Life or something like that. He shares a good amount of them. He doesn't share all of them, but he shares enough, right? So you can look at that as well. And again, you look at those types of things, those types of lessons, and then you come here and you're able to see them live as well, applied on a regular basis in action by someone that has proven live for the last 3 years that we know what the hell is going on, right? So yeah, it's not illogical, like I mentioned, for price to come down into here. I would prefer, if we are going to see some very heavy extended bullish price delivery, I would like and prefer it to just potentially spend a little bit of time here, maybe get into this fair value gap, tap it, and then give us a fast acceleration. But we have to allow for price to want to dig down to a discount, right? That's down here, that's equilibrium. So if price does want to reach lower because we've been so bullish, I mean, it's totally logical. There's a lot of imbalance in here. And if price wants to just dig lower to go and not only get them down to a deeper discount, but trigger further sell side and clear up some of these inefficiencies before it chooses to potentially start its run higher again, that's totally logical. And you can even frame, if that is something you trust will happen, you could frame counter trend ideas using this type of logic. What is it going to reach for inside the bullish narrative, right? Well, it could reach down for this fair value gap, these equal lows, which is a London's low as well. And then we also have this discount fair value gap as well that may look to be attacked. The less it spends time pushing lower into these, the more aggressive I feel like the bullishness will be, especially if we got the bonds and yields continuing to show, bearish yields, bullish bonds continuing to press higher, and then the yields pressing lower. We should then obviously see that translate to the indices as well as a DXY, right? And then that should send DXY lower. We should see this go higher. Again, it's not illogical for them to want to drop lower first, right? Because who's winning right now? If you think about it, from London, right? Not really much happened during London. Kind of just paused for a second. Built up liquidity. We have relative equal highs up here. We have this here. We want to see how this response is as well. Because if you're not familiar with this PD array I'm about to point out, which is the mitigation block, right? This could act as a mitigation block, right? This last down candle. Why is this a mitigation block? And what's the difference between mitigation block and a breaker? Well, breaker is something like this that breaks above the high, then drops down, uses the last down candle or consecutive down candles prior to the drop lower, right? But the difference is the run on stops here versus the possible failure swing here. Okay, so that is just the difference, and you use the same down candle for both the breaker and the mitigation block. It's similar, essentially, right? So in this case, we'd like to see how this responds. If price was to sweep down, attack this liquidity that I just mentioned, give us a shift in market structure higher on the 1 minute or the other lower time frames, and then disrespect the midpoint of this and aggressively push, then we start to know and build clarity around why we can trust that it will continue to go higher. Otherwise, if he uses this as resistance, it's more likely that it's going to dig deeper for a deeper discount. Okay, and then obviously you can't lose focus and lose track of the bonds and yields and what those are doing. Okay, it's a very important thing to keep track of continuously. Okay, so I hope this context makes sense. I hope it's not overly complicated, because I try my best to make it as substantive as possible, and then also applicable as possible. Because to stay motivated, you got to have things that you can apply and kind of get some instant gratification and clarity, just so you can continuously trust and be motivated to continue to study it. Because this doesn't have to be overly complicated. And I hope this wasn't overly complicated. And just remember, every call is going to talk about this, right? Every single call, the very first thing we do is start from ground zero. That is painting a narrative from the higher time frame to the lower time frame, and all the little elements that are involved in that, right? There's no magic bullet concept that'll get you to master all of what's incorporated into daily and higher time frame bias and narrative. It's a dance between multiple things, and obviously with multiple things to keep track of, if you've never done that before, and you don't have the mindset to do that just yet, obviously it takes a little bit of time, but obviously that's why I'm here, to answer questions, to showcase to you guys what I do, and I have basically proven over the last 3 years that got me consistent and keeps me consistent. And it also allows me to know when to trade, when not to trade, aside from some of the other rules related to specific news events and conditions in the market. But it's a heavy part to the puzzle. There's layers. Bias and narrative is like an onion. You got to peel each layer. There's fundamental analysis, technical analysis, intermarket relationships, incorporating COT, seasonality, different things like that to add more layers. The more things you can have in confluence that actually matter, like what I just mentioned and have been mentioning this whole call, the more of those things you can have in alignment, the more you can trust that things will play out in your favor. And it's just a very inspiring thing to see all this stuff work together, because then you start to develop the trust and the knowledge and be in the know that you're going to in fact be able to accomplish this goal that we're all so passionate about achieving. And again, it doesn't have to be rocket science, right? I try to make it as simple as possible. So if there's any concept or part of this that you feel was a little confusing, if you let me know in the comments at some point, or just DM me on Instagram, or get in contact with me somehow and point out something to me that you're struggling with, I am more than happy to help you. That's the whole point of why I'm here. Like I mention all the time, I have no other reason to be on the internet, right? I have everything I need in my life, really. And I just, I like seeing people improve. And I feel, I'm doing the whole trading community a disservice, and the people that are struggling a disservice if I don't do my best to try to at least help in some way, because what's the point in just winning by yourself? Unless you're a selfish prick, it's good to be around other people and share the gifts that you get, That's why we're here. We're here to help each other on this planet, so. But yeah, so yeah, that's pretty much what we're looking at. And obviously, again, you can see the continued amazing delivery being influenced by the bonds and yields, and how impactful this thing is, how impactful this relationship is to the DXY, and then obviously the influence it has over the currencies, GBP USD, Euro USD, and then the indices as well. Again, we're moving into a particular liquidity pool that is logical. If you were smart money and you have to have a loser on the other side and you want to take a trade at a discount versus buying highs, where is the most logical level? Well, we got London's low, we got sell side liquidity here from the other day, right? We have fair value gap here. We have many different levels, or many different areas in this pool of liquidity here that can be used as a logical potential counterparty to smart money buy orders, right? Because they have to go down to go up. They have to go up to go down, right? Why are they going down to go up? They're going down to sweep out liquidity and hit a near-term discount and engineer sell-side losers so then they can pair their buy orders with them, because they have to have a winner and a loser. And then the reverse is true when they go higher. They got to engineer and trigger in buy-side liquidity so then they can pair up their sell-side delivery, their sell-side orders to then attack, the sell-side PD array to then take profit, right? And then they obviously trigger out sell-side to go higher and take profit above buy-side liquidity, right? So that's like the whole paradigm with smart money that ICT tries to drill into us. So then you're not in the market just winging it, guessing so much. I mean that kind of goes hand in hand with what I've been discussing this morning, and continuously try to drill into your guys' head about these intermarket relationships and just the overall risk on, risk off behavior, which we basically talked about this morning, and how that impacts things. It helps you gain trust, and helps you decide which one of those modes of delivery will take place. Are we going to go higher to go lower? Are we going to go lower to go higher? Right? What are these other markets telling us about, either one of those scenarios? And then once you determine that, it just makes things a whole lot easier. And then obviously waiting for the time, because there's no news, waiting for 6:30, keeping in mind the open price here and all the other things we've mentioned. The next thing comes, or the next thing that comes in the order of things is timing, right? Aside from all the analysis we've done and dug into, you have to wait for the timing. When there's no news, you wait for the open on the New York session, because that's when we know, just like with a news event that comes out, we know there's volatility there. Well, if there's no news, we know for a fact that 6:30 or 9:30 Eastern, that open price will have a volatility injection, right? So with that being the case, that's why we wait. That's why that's a rule that doesn't change. It's one of the rules on the list of non-negotiables that you really consider, okay? Because timing, right? Timing is, I could say this. Timing is everything, If you don't know how to time your analysis, what are you doing? Like, you're going to learn real fast that it's not just analysis that is the king. It's also timing that analysis, and then what also confirms that move within that time frame that you're looking to engage in. Right? So, yeah, I hope that made sense. Let's check the... What? That's weird. Hey, can y'all hear me? One person's saying they can't hear me. Yeah, I want to make sure that... Oh yeah, Nico. Okay, yeah. So it's you. It's gonna tell that dude that it's him, unfortunately, because he said in the chat that he can't hear me. So yeah, tell him that it's him. if y'all can. Dang, that sucks. We've just talked about so many very powerful things right now. It's like ridiculous. A lot of my mentorship students are here too, and they know the vibes. They know the vibes. All right. So yeah, do you guys have any questions so far? I know my mentorship students that are here probably understand all this because we drill this home on a regular basis. Ridiculous amount of reps. Right? But yeah, if there's any of you guys that are not in my mentorship and you guys or my private community and you guys are just my YouTube family, let me know if all that stuff made sense, because it's so important. You can even ask any of my mentorships or my mentorship / private community students the validity of these things that we've just mentioned, and they'll be the first ones to tell you that this is revolutionary and things that need to be really focused on, right? But yeah, so if you guys have any questions, let me know. If not, we're just going to continue to press forward, because there's, in my opinion, going to be a lot to learn this morning, and then also gain experience on based on all the wonderful things we've just discussed. I think I'm gonna name this live stream Bias and Narrative, right? Because that whole like 30-minute conversation was literally big huge chunk of the process, and then obviously there's other things, but we're not gonna fully get into that right now. All right, so yeah, we can see how price is pushing lower, right? I mean, I'm fairly convinced that this is going to be short-lived. Okay, I feel like it's not going to heavily continue to drop. At least that's not what I want to see. Going into this day, we are going to be focused on seeing reasons for price to go lower, to go higher, because of the overall narrative, right? The overall narrative is bullish. Okay, it's been really bullish, and that's beautifully confirmed with the bonds and yields. So we're going to just continue to observe whether that remains to be the case. We also have this order block here as well to continue to monitor. Right, so this midpoint of this order block, this fair value gap here, this fair value gap here, and all the quadrants inside of that as well, all of those are going to be significant, plus this new week opening gap, right? So price continuing to go higher is what we really want to watch. And then obviously, again, the relationship I've discussed should impact the DXY and then the indices as well. So I have faith, because of all the things we've layered together confluence-wise, the price is going to sweep out liquidity to the sell side just to give a Judas swing. Generally before the 6:30 open, Pacific Standard Time, generally before that open price for New York, any movement before that, you're inside of the manipulation portion of the daily range for the most part. Right? So keep that in consideration. So if we're bullish before 6:30, this is what we pretty much want to see. Because now all these people that were winning from yesterday, that rushed their stop up here, they're now looking to possibly get victimized, and the smart money is going to look to frame out something at a logical level. And that logical level, based on what we see here, is very obviously right here. Okay, beautiful, beautiful, brother. I'm glad you can hear now. Okay, let's. What is this? It is 15 minute. So it's our 15-minute fair value gap. Again, I prefer to see price want to dig lower into that, tap into that, possibly off the heels of this, moving a little bit higher, getting to this. But then staying below the midpoint of this weekly fair value gap. Right? So yeah, I just want to mention one more time, if you guys get value from this video, definitely like and subscribe if you aren't already. Much appreciated. It helps the YouTube algorithm push me out so more amazing students like yourselves can be exposed to this information, right? So yeah, I greatly appreciate that. Yeah, now it's just a waiting game. You know what I mean? Now it's just a remain calm, remain patient, continue to observe, right? We see how at least one of the indices, possibly two, seem to want to reach down into the fair value gap. Now, if one fails, like this one for instance, if this fails to get to the fair value gap and we start pushing away aggressively, that is a form of SMT. If we can't even get down to the fair value gap on one of the three correlated indices, right? That's the same with like GBP USD and Euro USD. If the Euro USD hits a discount fair value gap, but GBP doesn't, and it runs higher with DXY falling, that is a form of SMT. It's not only just highs and lows, creating a crack in correlation. It's also when it comes to fair value gaps, right? When one correlated asset fails, or a couple of them in a group of correlated assets, that becomes a form of SMT, right? And then couple that with all the other things we've discussed today, it's pretty amazing, right? It builds so much clarity. You're not guessing or just wondering, oh, why is it, or if is it going to do this? Is it going to do that? Why is it doing this? Why is it doing that? Those questions get totally obliterated when you understand the intermarket relationships we've talked about, and then begin to obviously, in many cases, add other confluences like seasonality and COT. Right? Those are more long-term, obviously, especially COT. But there's ways to use it in a like short-term capacity as well. Maybe we could talk about that in a later time. But yeah, so we seem to be having exactly what we want to see happen. Okay, so remember what I mentioned. We want to observe how price chooses to either respect this or not, because that will give us a good gauge as far as whether price is going to want to dig deeper than just this fair value gap, right? I'm sure inside this price delivery, you could find well, we see SMT here, right? You see the highs here, how they failed. Seeing this SMT and then knowing the downside objective within the bullish narrative, you could start to see how you could paint this counter trend idea without losing focus of all the knowledge that we've just talked about in terms of the bullish narrative, right? You can still look to trust logical retracements or counter trend ideas inside of a larger, higher time frame narrative without changing that narrative and still be able to be effective. But obviously counter trend ideas like this one, for instance, would have to be half risk. You know, you have to always cut your risk by half, right? Or lower when it comes to counter trend ideas, right? So yeah, looks pretty beautiful right now. The delivery to the downside. We had delivery to the upside, delivery to the sell side. Now we're inside of a level that we want to monitor and observe, right? See how this is going to respect or not respect this possible mitigation block. And again, we've been very, very bullish, very, very bullish. Bonds and yields are pretty much in alignment with continued sentiment that's currently in the market. But you got to remember, inside of a higher time frame narrative that's bullish, it doesn't mean there's not going to be any bearish days. And those bearish days, if we trust the narrative being bullish, will just be to set up further near-term discounts and runs on sell-side liquidity that'll eventually pair continued bullish delivery, at least in this case bullishness, right? again, it's logical for us to see price dig lower to go higher when we're bullish on a daily and weekly basis. It's also good for the opposing view as well, right? For selling, it's good to see price start the week by running higher to then go lower and continue the sentiment. And the same logic I just mentioned in terms of framing out potential counter trend ideas, with this in this case being bearish inside the bullish narrative, that same idea can happen with the reverse, right? Like the other side of things. All right, it's all about navigating price, right? So understanding that when there's a large impulse, when price runs higher or one direction, in this case higher, it's logical to see some of those days, even if the week ends bullish, it's logical to see them want to do stuff like this. That should not take you away from that higher time frame narrative we've discovered, which in this case has been bullish based on all the things we've just discussed, right? So depending on how price responds inside this will give us a good indication, along with what the indice or the interest rates choose to do. It'll give us a good indication on whether we're going to continue in a fast, very strong manner to the upside, or if we're going to look to try to attack and punish some sell side delivery. Right? The higher time frame narrative does not change day to day, but the overall bias can. Okay, so that's a little difference between bias and narrative. Okay, we got relative equal highs here. Got fair value gap here. Filled that completely. So yeah, we've dug lower. We're using a new day opening gap. We have pretty much failed to get down to this lower fair value gap, at least for the time being. So yeah, we'll see. Seems like the currencies are going to continue pushing higher, at least for now. Right? We've hit the open, so we got to now just observe and wait. Let's see how we're going to continue to deliver. Right? If we break down below this low, that makes me uninterested, really, at least for the time being, in favoring buys for the currencies. Right? We're going to continue to monitor the DXY as price prints throughout this opening range. Right, and another thing you always want to pay attention to is regular trading hours gaps. In this case, there's really not one. Right? Go look at the NASDAQ. There's not one for the NASDAQ either. Well, it kind of is here, but it's very, very minuscule, so it's not going to have too heavy of an impact. But yeah, again, I do feel like we can reasonably favor continued bullishness. And again, unless that changes, nothing changes, my friends. Nothing changes. Alright. So now we got an impulse going on. Let's move down to our 1 minute. We have all of our higher time frame identified. Now we want to see what happens inside this mitigation block, or supposed mitigation block. We'll see if it could retrace, possibly give us an opportunity for the buys to take place based on what we've talked about. This is just a array. It's not to say that this is going to hold, because we already have our overall narrative, and then now we also have our overall bias. This is just a premium array that's above price that we have to watch, that may trigger a retracement And if it starts to show signals that it's going to really respect it and push away from this to the downside, then we would know that our bullish opportunity here that's potentially setting up would be invalid, right? So if it retraces down to this fair value gap, that may be a good opportunity for something to study to the buy side. All right, we do have an inversion fair value gap here as well. So we're going to want to monitor that. And then we got a fair value gap in there like I mentioned. Got one right here. So price comes down into there and DXY continues to fall. And if the bonds continue to rally and then the yields continue to fall, that leads us to trusting that we are going to see price continue to smash higher as we have portrayed and asked for this entire morning so far. Buy side up here. Again, we got this inversion fair value gap. If it doesn't give us any type of retracement and set us up with something, then you obviously just have to consider that a opportunity missed. But then again, if it didn't present you with your model, did you technically miss a move? I think not. All right. Let's go see, did the NASDAQ give something? Nope. Nope. It's just rallying higher. So continue to watch what's taking place. Again, we have, I think we have a fair value gap up here too that could be possibly influential. Let's observe this. Maybe this acts as an immediate rebalance. We'll see what happens. So if we get back down below this mitigation block, here, let me mark this so you guys know. I appreciate all you guys that have hopped on. Again, I'm sorry that I haven't been live the last 2 weeks, but I greatly appreciate you guys understanding and spending time with me. I appreciate it. And I hope you guys getting value. So yeah, we got this mitigation block. If we get down below that and look to use that as a potential resistance, if DXY at that same time aggressively pushes higher, if the yields try to push higher, and then the bonds end up possibly dropping lower, that in conjunction with price getting below this mitigation block area would start to, start giving us evidence that we may not be as bullish as we thought. But given the circumstances right now, it seems like we are perfectly in line with the overall sentiment and have a pretty clear visual of what price is going to continue to favor this morning. Let's look at the lows here, try to see, is there any SMT? That's a pretty massive crack in correlation. Yeah, so that is fairly interesting. I'm not sure why the Dow is destroying itself, right? But yeah. So again, there's no opportunities that have presented themselves thus far, right? So because that's the case, right, you don't worry about anything. You don't worry about missing anything. You don't worry about any of that negative thinking, because we have the 650 macro incoming, which could lead us to have a change in things, right? If we start to see things change. And then maybe that would set up an opportunity either to buy or to sell. I would like to see buys, right? Based on all the things that we've discussed. That's what I am favoring. But again, we always have to have a contingency plan just so we can get familiar with being able to adjust real time. Or if you're one of the people that doesn't like to adjust and go in there just looking for what you want to see and it doesn't give it to you, right? You might as well just sit on the sidelines, right? Some people like to come in with an idea. If it's not there, they just sit on the sidelines if it doesn't work out. And that's totally effective too, right? It's just one of those things. You got to understand who you are as a trader, right? But hopefully a lot of the things we go over live on a regular basis can help you start to have a flexible mindset and start to be able to identify when things shift, when the change in the state of delivery is taking place, and you know, develop the skill set of knowing how to trust it. All right. So yeah, it seems like we are continuing. Right? There's not a fair value gap in here. Wasn't really. I don't know. Is it? No. Yeah, it's not a fair value gap. So let's see what happens. Right. Let's continue to observe. We have came up into a fair value gap here. Again, we came up into this mitigation block. Right. So let's see how. If we get above that, it's certain that we're going to end up getting above these highs. Again, I still favor bullishness heavily. That's where my interest is at. But again, if I can't get in line with a particular idea, like if my model doesn't show, which it hasn't, then we continue to wait. You know, keep in mind your model too. Keep in mind your own model and the things that you look to see in price and the rules surrounding that particular way of doing things, and you know, observe where you think you would be able to enter. You know, we have the context in terms of narrative, right? So you have that laid in your beautiful hands, and right, it's kind of now up to you to figure out where you want to possibly enter a demo trade, or of, you know, based on your own opinion, potentially put a financial risk in the marketplace, right? Yeah, this here can also, from what I see, if it does get above this high, this could be classified as a market maker buy model, right? Notice how there's consolidation, price drop down below to a particular level here. There's a accumulation, reaccumulation, large smart money reversal, first stage accumulation. Because we broke through half of this range already with one leg, it's probably not going to have a second one if we do end up getting above the high or continue to go higher. So we'll continue to monitor that. We have this order block here, and then again we have this assumed mitigation block that now turns into an inversion. All PD arrays, like ICT has said, have an inversion characteristic, similar to the fact that almost all of his entry models have continuation variations, right? So I keep those things in mind too whenever you get upset about missing a setup, because you don't really miss a setup. There's always setups. See, so yeah, this big drop here, now I'm really convinced, because we've came all the way back, I am very convinced that we're going to continue. Yeah, this just, in my opinion, based on all the things we've talked about as well, screams continued buys. And it's just really, really ramped up. The main takeaway, I hope you guys take away from this, and pretty much all the live streams that I have, is the fact that we're able to call this before the fact. Were we saying price is going to sell off and be bearish today? No. Right? The things that we discussed in terms of intermarket relationships, have those provided the result that we were saying would occur, continued bullishness? Yes. Right? 100%. Right? So I hope that seeing this stuff is helpful in terms of building not only your skill set, but building your trust in the fact that you can, in fact, attain clarity, and there is a way to make this a very repeatable, reliable way of observing the market, right? So let's watch this low here. Oh, whoops. Let's Let's watch this order block. Let's watch this low. Watch the DXY. I think this is going to retrace into this order block and push higher. Also, like I said, this inversion for value gap up here could very well act as support. And then we have this potential target up here above equal highs. DXY is still falling. Okay, we got the yields falling. Bonds still show interest to the buy side. One thing I don't like is the equal lows here that I've been mentioning all week as well. There is a risk of that wanting to be taken. But obviously until that's proven, until it starts to really deliver, right? Like say it gets above these highs like it is and then reverses, and then all of them kind of fall in line. Maybe the yields end up turning around. That would be the time when I start considering, but they may leave it. And based on what we're looking at here, it seems like they will. And it'll just continue to go higher. Like I said, this here was a beautiful entry. I mentioned that. Okay. So if you miss this one, right, you would have been able to enter this one based on the logic. Notice how this here, the midpoint of that wick was respected, right? I've talked about wicks for the last 4 months, and pretty much the last like couple of years in my private community, and I'm grateful that it's being spoken about a lot more now, because this is just one of those little nuances that people overlook when they're studying the content that ICT produces. It's one of those important signatures in price, and it just helps you read order flow. Another order block here, so let's see if that is also impactful. Target is up here. See what happens. So we got one order block, a swing low, 2 order blocks, swing low. So the only way the bullishness is disrespected and no longer of interest to me is if we smash through those, because we got to have 3 PD arrays get violated in order for us to change our interest in one side or another, especially if we're in line with a higher time frame narrative like we are. All right. So yeah, now it's just a waiting game. Study and observe how this delivery continues. And this is a London high here. So that may also, if DXY continues to tank, London's high may be what's on the menu. Yeah, we'll see. Hope y'all have had a good week so far. Hope y'all enjoyed your weekend. And again, if you guys get value from this video, I greatly appreciate you guys hopping on. And if you could like and subscribe if you haven't already, it's much appreciated. So let's see how this order block either holds or doesn't hold up. If DXY continues to tank, we should be able to continue to see price logically get up at least into this, right? Or even before that, we have this high here. And if you jumped on the opinion that I pointed out, which was taking price from here to then target up to there, I believe you would have already had close to 5. Getting up into that would be a beautiful 5-point bread and butter setup, which we called before the fact. Very logical, very detailed knowledge based on how this rallied up and why it makes sense for it to have done so. So yeah, hope y'all have gotten value so far. It's pretty amazing to see how our analysis worked out and continues to work out just perfectly, almost on a daily basis. Pretty much on a daily basis. It sucks too for the ones that have no patience and they don't sit long enough or have enough attention to be able to sit and watch things play out. Because, I mean, it's incredible, the skill set that many ICT traders have. But it's unfortunate the fact that a lot of people just don't have the patience. And they miss so much, whether it's when they're watching people that are going out of their way to showcase things live, or if they're just watching ICT himself. It's really unfortunate. But, like I and ICT always say, trading's for everybody, but it's really not for everybody, right? It takes a special type of person like you guys who have been sitting here for basically an hour and 20 minutes at this point and just sit and watch charts and start to read what they're saying and have an interest in doing this whole thing. It takes a special person. And if you guys are able to sit through his lectures, if you're able to sit through our experiences we do live and you enjoy it, then you were built to be a trader. And don't let nobody tell you otherwise. Don't let losing trades try to convince you otherwise. Don't let negativity on the internet make you contemplate quitting. Because the worst thing you'll be able to do now is put this down and quit because it's too hard or whatever the excuse is, and then have to go work and think about this constantly nonstop and how things would be if you never quit. That regret is much worse and would be much worse for a lifetime than it is to just suck it up, face reality with trading, and work towards this skill set and be patient, because eventually you'll get there. Especially if you trade ICT Concepts, you're in the right place. You're doing the right things. So target's been fully met. So like I said, the idea here was to get price to run up to that fair value gap. Now, whatever it does after that, in my opinion, doesn't really even matter at all. Whether it's going to continue to run higher or not, doesn't really matter. Obviously, we'd prefer it to want to get up there, because that would just complete the whole move. But that from here to there, that would be enough. That would be beautiful 5 points, beautiful logical idea, bread and butter. And now you'll just observe and see how this relationship to the order blocks are going to hold. Are they not going to hold, right? And just continue to gain some experience with what price continues to do, right? Seems like we're really excited to get up to those highs. So we'll see if that continues. Currencies seem like they're digging to the fair value gap here. See if that holds. Yeah, right, Nico? Bread and butter? Shit. Beautiful bread and butter. So let's see if this will have enough strength. DXY seems to have stalled. Let's see. See if this will have the strength. If we got above this, it'd be an interesting hold to get up possibly above there. But if because we've already got up above these highs, hit this fair value gap, if DXY chooses to rally here, it may give this as a turning point. Try to pull back on this aggressive run. But yeah, now we're inside the macro, 650 macro. All right, so let's see if that can give us a exciting move to the upside, sweep out the highs. If price gets up into this high, I would be done for the whole entire morning, especially if I was in a move here. Yeah, if there's any specific topics or part of the analysis we did today that you guys feel has stood out to you, let me know in the chat so I can know or get a feel for what's really helped, what's really stood out to you guys. 1 hour internal to external, 1 hour SMT, market maker buy model formed, entry was on the 1 minute order block once we held above the new day opening gap. Beautiful explanation, brother. Nico, you're going to be a freaking savage, bro. I'm telling you. I'm telling you, bro. I'm telling you. Oh, you did on NQ? Even better. Yeah, that type of move that we just outlined here on the S&P, that type of move on the NASDAQ, that's like 50 points. I appreciate you, brother. As always. I appreciate you guys as much as you feel you appreciate me. Here we go. Isn't it amazing to see things work beautifully? And now you have a why. Why? Why did it play out? Right? Just to show you guys. Beautifully delivered. Beautifully delivered. Oh, why the hell is it all weird? Shrink this thing down a little bit. Just to prove that we aren't playing no stupid games, trying to win stupid prizes. We're playing savage, serious games, trying to change our whole life, change our whole family tree. And some people trying to help others do the same. And I hope that your guys' time spent with me, I hope you guys can achieve clarity at some point with your time you spend. Because I don't take your guys' investment in time that you give to me and the trust that you put in me to even sit and give me any of your time. I don't take that lightly. I try to do my best to give you guys very powerful insights. And days like this are the days we live for. You know, we literally think about what you guys have just witnessed. Okay, I'm not ICT. Okay, none of his students are him at all. But we have literally painted from ground zero to potential entry to exit and everything in between. The whole process was just laid out. How to determine bias, narrative, right? Why? Right? Why should that happen? Price go higher. I showed the earliest exit, right? The earliest entry, which was this opportunity here. I didn't like this one because it didn't give me a fair value gap. I showcased discipline and practicing what I preach. I showcased early target, 5 points, and I now here am showing you actual target that I took, which was the full target. I trusted that it was going to get up above there, especially once we got up above this fair value gap I mentioned. All right? So I hope that this type of process and live call is of some value to you guys. If there's anything you guys think I can improve upon to really do my best to help you guys even further, right? I am always open to hearing how you guys feel I can improve as a live streamer or as like a presenter overall. Because again, this is all for you. This isn't for me, right? I'm not here to show off. You know, you'll never see me posting, hey, look at this payout that I got, because that's not going to matter to you. You see my live account, you can do the math. Okay? Like, I'm not looking to be praised for image. I'm looking to have an impact, period. Because I could care less about image. Okay? It is what it is. Right? Some people don't like that. And, you know, maybe they think it's boring. But you know what else is boring? You know what else is not fun? Continuously failing, not making any improvements because we are in our own way and focusing on the wrong shit. Okay? You got to focus on the right things and get around people that know what those things are so you can be influenced or impacted by that and start developing good habits that'll lead you to a higher probability of success. And again, for those of you that are here on a regular basis, this is nothing new to you. But those of you that do show up here and you're new, for one, welcome. And for two, you can ask any of the students that have commented on this video. You can ask any of them whether you should feel like you're in the right place or not. Because not only my words anymore. It used to only be my word against people's opinions. But now it's far greater than that. There's multiple people. There's over 175 students I've crossed paths with in a private capacity. And there's a large number of students that have revolutionized their whole life. And there's also many that are on their way off of spending time with me. And then obviously, credit also goes to ICT as the wonderful mentor that he is. You know, there's no recreating the wheel. I have my processes. I never claim to apply every single concept that he teaches because it's not necessary, right? There's probably a lot of things that you feel like I didn't mention, some of you. And it's because I don't care, right? I have the specific things that I use. I have my specific library of knowledge of particular topics. Like, for example, that mitigation block. The fact that it turned into a reverse or inversion, right? We mentioned that, right? But it's not like that was the only reason why I took the trade. It was part of my reasoning to trust that price was going to be bullish, right? But it wasn't the whole be-all, end-all. But I say that to say you're not going to use every single idea or concept. There's going to be some stuff that resonates with you, and you just have to figure out your recipe. But you also have to have an answer to important non-negotiable questions, like bias and narrative. How do you determine that? What's the process? Risk protocols. How are you going to manage the highs and lows? What's your process to that? Targeting, right? What's your interest in targeting, right? Are you looking for 5 points? Make it, on one standard E-mini contract, which is $250. Or are you going to look for larger range moves, right? There's a process to both of those, right? You saw this opportunity that had a little bit of both, right? The bare minimum and then doubling that bare minimum based on more context, the mitigation block, the inversion of this fair value gap, right? Confirmation while it was pressing above that. Intermarket relationships, right? All those things allowed for me to have trust that, we'll likely get up above here as long as all this stuff stays intact. And it did. I trust my system, so I held it. It's a week that has a lot of red folders, by the way. One prohibited and then one that's kind of wonky. which is this one here. It generally has some wild price delivery. Unemployment claims is one of my favorite to trade, so it's got light volatility. Sometimes it's pretty exciting, but nonetheless. But yeah, do you guys have any questions? I hope that most of the things that we discussed has made sense. Before we get off, I'm going to do one more round throughout the assets so we can discuss some of the things that we mentioned earlier and then what has transpired off the heels of that. Because remember, I said that once this is taken, that's going to be significant, right? And it may make it so I am not interested, especially since I took out the trade here. It was a beautiful run, right? We've taken out this high. A very logical setup from start to finish. Price drop lower to go higher. Bullish power 3 below the open price at midnight. Did we get down? We didn't even. Yeah, we kind of did, huh? Barely got below the 6:30 open, right? It just had a little baby wick, but that was all inside the new day opening gap. It was below this open price here, and it's just blew up to the upside, attacking this, right? And think about this: all the things we've talked about today, this whole move, the whole context of what we've used today, getting price up into this high, that's enough. I don't have to know where the end of the week is going to end up. I don't have to know what price is going to do tomorrow right now. I don't have to know whether price is going to continue to go higher and higher or is it going to reverse all the way right now. I don't have to know that. Because I went in there, we painted out a narrative, we made sense of the narrative based on very impactful elements. Everything was in alignment, and we beautifully delivered, offered two opportunities, right? This is the first one. After this one didn't present anything. And then once price got up above here, rejected off, here's the second one. And this one is in fact in the macro. And notice the difference with the macro delivery. Quickly ran away, one shot, versus the entry that was taken outside of the macro, took a little bit of hanging around. That's just another thing, the importance of the macros. Remember what I said earlier, timing is everything. And then obviously context to why a narrative should be a particular sentiment or not is also very, very impactful. Okay, so yeah, guys, let's do somewhat of a walkthrough here. So again, seems like the bonds are possibly going to continue favoring buy side. We do want to observe what's going to happen here because price is taken buy side, taken sell side, left equal lows though here. But this high to that low is the range we're working within. So we got to see if this candle gets broken down below, we'll be seeking the sell side. If we stay above the lows here, I mean, this looks all engineered in here. Look how beautiful that liquidity pool is. If they do show interest to get down there, then that'll turn us bearish, at least for a short time, with the indices. If it stays intact, right, and we continue to just use this fair value gap levels like the midpoint and stuff as support, possibly this as well as being impactful. If we choose to stay above those things, then obviously we continue to favor buy side. But if we start getting aggressive smashes towards sell side liquidity in this market, and then we start to see some type of maybe a change breaking through the levels we mentioned earlier about this order block, the wick, the fair value gap, right, the weekly fair value gap, If it chooses to break outside of that to the upside, then again, that will also create a change in sentiment potentially for the DXY. That would then possibly instigate bullish DXY, whether it's for a short time or a long time or something significant. It'll have that type of impact. But until any of that type of stuff happens, unless this changes on this daily chart based on the levels I just mentioned for this asset class and then this asset class, we would remain holding on to our narrative, because narrative stays intact even if it does a small retracement against the overall sentiment that we see currently. All right, so I hope that makes sense. What I'm trying to point out there is how you can go about trusting a narrative for a longer span of time. And then like the retracement idea I talked about earlier, how price in a downtrend will have a bullish move. Your ability to be able to trust that that is just a retracement versus a total change in overall delivery is heavily impacted by this type of process I just mentioned, right? If this midpoint of this order block breaks, if we get above this new week opening gap, if we get above this fair value gap, all in the close proximity of price where it's at right now, if we were to get above that, also get above this weekly fair value gap, that's all promoting the fact that price may want to go higher, right? So as long as 3 PD arrays above price don't get disrespected, bearishness will continue. Now, if they get disrespected to the upside, if 3 of those levels get totally violated and the price closes above those levels, then that'll start pushing us towards the possibility of something changing. Then we go take that information and look at the other assets we've mentioned today, take note of what they're all doing together at that particular time, and then you start to make decisions accordingly, right? 3 PD arrays above price should hold on this higher time frame, because you may see dramatic changes on the 1 minute, but that is inside the picture being painted on this daily chart. A 1 minute shift in market structure bullish in a daily time frame bearish trend is likely just a retracement to scoop up liquidity like we mentioned earlier before price took off from the lows down here after it swept out these lows and rallied, right? They took price lower, sweeping out lows to then run up and attack buy side. They positioned themselves below the sell side, triggering out stops, broke to the upside, and now they are likely taking profit like I did, because this is where logical losers are at, and this is where logical losers are at here. Losers in terms of sellers, right, trying to sell price, and then up here they're people thinking that once it breaks this high, it's going to act as resistance. Resistance turned support. And you can see that they got totally viciously victimized, same as they did down here. But guess what? We got in with the lion's portion of that move, and we're able to get in profitably and take profit right where smart money would most of the time take profit as well. We used this sell side as a prerequisite, aside from all the other analysis. We use this as a prerequisite, knowing that price did its work down here, pulled in these orders. DXY was bearish at that time. And then price shifted market structure aggressively, giving us displacement. And then price ended up continuing to march higher until it got to this high, which, as you can see, has now instigated some serious seek and destroy characteristics. This characteristic, based on this news event specifically, has been spoken about a couple times by ICT. Basically, he mentioned that this news event specifically has a lot of this back and forth, like paint stroke, right? It goes over once and then it'll go back over it again, then it'll go in whatever direction it'll go, or whatever direction it's intended on going. So this is to be expected here. Not only that, we have that news event plus a red folder that's prohibited, like I mentioned. So note that perspective in your journal as far as the characteristics of this news event, along with the Fed chair, how that's a prohibited news event for new traders because of the vast volatility injection that comes into play. And whatever this guy says, price does whatever the hell it wants during that time. And it's used as a smokescreen so they can go in there and whipsaw the crap out of people and then make people give up and lose their drive to even succeed. It's a vicious thing. But yeah, we can see how there's SMT. Okay, so we see that there's SMT, so that's kind of instigating the fact that we may look to dig lower. It also left the lows, so that's pretty relevant. Once they ran up, our narrative to go higher was intact. Now I have no interest in trying to buy this price action at all. Even if I didn't take a trade, I definitely wouldn't be trying to force buys given the SMT, given the strong move lower. And there was no opportunity to continue to buy after the high was taken. Right. So then we can also see that the DXY also has kind of given a little push higher, kind of making it difficult for this to continue to go higher. Then you can also see the correlation effect in terms of risk on, risk off, the relationship between all of them. You can also see how that sell-off we just saw on the backdrop of DXY giving a small rally. You can see how that's also confirmed here with the currencies. They've done a similar thing. Now, whether it's going to run higher or not, or continue to drop lower, it remains to be seen at this point. Our narrative overall hasn't changed, like I mentioned. So we favor seeing price giving continued buy-side delivery. But then again, right, it's showing us right now at this very moment, it is uninterested in fulfilling that sentiment and is now coming down seeking sell side. So what does that tell you? That tells you that now it's time to wait. It tells you we have smacked a beautiful run higher. Just a reminder, here, right there. You could see all the reasons why we entered that. And now price came all the way back down. This run above the stops, run above the lows, that's seek and destroy. When you see seek and destroy like that, that is automatically telling you we are in low probability conditions. When you see price hovering around equilibrium on a higher time frame range, that is instigating potential low probability consolidation conditions. When you see price bouncing around from new week opening gap to new week opening gap like a ping pong ball, that is indicative of low probability consolidative behavior. When you see heavy cracks in correlation between groups of markets like the ones that we've mentioned today, that is indicative of low probability conditions. Okay, so, and there's more to the list, obviously, but those are some of the main identifiers for low probability conditions for you to consider. Red folder days, right? A lot of times that's a low probability condition. If London has been very, very quick, right? If it's been very fast in one direction, it's more than likely that the start of the New York session will likely pull back against that and not continue the trend that was being carried in the London session until possibly later in the AM session or towards the PM session for indices, because they want to attack liquidity, similar to what they did here. They pulled down, right? Attack liquidity from overnight, aka London's low, triggered that to use it as counterparty to their buys to eventually take profit above these highs here. And now we've come all the way back. Okay, so yeah, I hope those nuggets made sense. Those are also fairly important for identifying conditional awareness. And I hope a lot of the things we discussed today have assisted you in bias, part of bias, right? Give you some more pieces to that. And then also just price navigation, right? I mentioned the 3 PDA rule, and what helps change my perspective on the higher time frame. That is if 3 PD arrays are broken, right? I mentioned that over here. And if that stays intact, I continue with the narrative, right? Now, unless that changes, again, that's telling me to stay with my overall higher time frame direction, regardless of what the 1 minute's going to tell me. I don't care what the 1 minute, 5 minute tells me if the daily time frame is supporting downside move or upside move, depending on what the bias is or narrative. All right, those 3 PDAs. All right, very, very simplistic way to try and validate or invalidate a particular move or directional narrative. All right. So I think I've talked about everything that I wanted to talk about. We identified a beautiful opportunity. So if you guys don't have any questions, I will probably call it here. As always, I appreciate you guys hopping on. Yeah, before we go, let me know if you guys have any questions. Throw me an emoji in the chat or give me a yes or I have no questions type of comment. All right. Yeah, because if you guys got questions, I'll obviously continue. But I've taken my pound of flesh. So I appreciate you too, Nico. Much love, my brother. We will be live in the private community tomorrow, as always. And then we'll be back here on YouTube on Thursday to kind of get a feel for what's possibly going to occur as we march into the the Fed speech, and then that other news event as well. We'll do a study on that, see exactly what the characteristics are. All right. But yeah, like I said, if you guys don't have any questions now, I'll probably call it. If you do come up with some questions later, definitely send them in the comments of this video. Again, if you guys haven't already, definitely like, comment, and subscribe. Share with some of your friends that trade. And yeah, I guess that's it. So I will see you guys back here on YouTube on Thursday. And then my private community, I will see y'all either later today, actually, or for sure, tomorrow morning, 5 a.m. Pacific Standard Time, per usual, right? But yeah, guys, so God bless. Thank you for coming and sharing your support and interest in the channel and the content. And I hope you have a good rest of your day. But until next time, I will see you on the next one.